Well, hello again, Maverick traders, and welcome out to your daily currency recap. This is Ankit here, and let's break down today's market price action. It's a Tuesday. Let's get into it. As always, we're going to start with our top-down analysis, take a look at what's happening in the broader markets, bring it down into our currency baskets, and then we'll take a look at some possible setups here. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at our market analysis today, let's just get right into the news of the day. And we are, again, no change in the markets. The market remained under pressure. A lot of change since last week after the CPI. And here we are. The equities looks weak and the dollar and the bond yields remain strong. So that's been the theme since last week and really no change so far. Now, if you take a look at the numbers, and what we're noticing is that the Aussie and the Kiwi are the worst performer. Remember, just last month, they were actually the best performers. So there's a bit of a correction happening as the dollar is soaring higher. Take a look at the dollar. I mean, it was already looks extended, and here we are adding more gains to it. So dollar is really the place to be, and that's really where the movements are across the board. You can see that outside of that, yen was not really a big mover. Some of the European currencies are holding in here. Again, euro, pound, and even Swiss franc has recovered a little bit since being really weak for the last couple of months. So this is just one-sided trade here for Aussie and Kiwi against the dollar. Really, there's a lot in the middle that's not really going anywhere. So this is where you just trade what's moving in front of you. Now, if we take a look at the equity markets, you can see the S&P is weak, the VT is weak, and cryptos are down. Gold is kind of holding here, slightly up, and oil is down. So this is, again, a classic risk-off sentiment in the markets. Now, the cryptos really, it seems like the gas that really was pumping you higher has kind of left, and here we are seeing more weakness. Bitcoin Cash, which has jumped a lot last month, is now correcting and extending some losses here. So cryptos overall looks weak to me, and there seems to be no bounce coming into the markets here in the crypto as well. Now, if we take a look at where we are in the broader markets, remember we were at a +2 and a +3 for the longest time, and here we are at a -2. Now take a look at the chart. What does the chart tells you? Below the 20 and below the 50. And now this is where markets are more bearish than bullish. So this is where you want to use you want to be able to quantify, okay, it doesn't matter what the noise is. Just, see what the price action is telling you. And price action is telling you more weakness here. So that's really where we are. Now, looking at a weekly calendar, again, we started off with some numbers yesterday. Really mixed number. And here we are, CPI out of Canada today. It was more on the weaker side. So again, not really a big upset in those numbers. Remember, the big moves happen when there is either the number comes out way far expectations. So far, it's kind of mixed reports here. Tonight, we have the Kiwi CPI. Again, that's something I'll be watching for all the Kiwi pairs. And remember, Kiwi is the second weakest currency right now. So that could really amplify some of the losses. Or we could see some sort of short-term relief rally here. As we go for the rest of the week, it seems like, there's some economic reports along the way, but, the broader theme is really strong here, which is supporting the dollar, and the strong dollar is really keeping a lid on a lot of the other currencies. So let's just jump in our currency analysis here and take a look at some velocity scores. And what the velocity score is telling us, it's really spread across the board. But let's just take a look at where the strength and weakness is. Aussie, Kiwi, and dollar is on the strongest side. Interestingly, Swiss franc continues to outperform here. Remember, we are in this relief rally mode in the Swiss franc here, so hasn't really rolled over yet. And here we are, euro and pound. So you really have to, pair the most left currency versus the most right currency, and that's again brings us back to the Aussie dollar or the Kiwi dollar. So let's jump into possible trades and take a look at some setups.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. trade our capital, and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
And looking at some possible setups, let's just take a look at where we are. And of course, there's two types of traders right now. One who has been in this move and enjoying it, and the other one might be on the sideline and now waiting for the next opportunity. So whenever you're in this situation, just realize that things can stay hot for longer, and at this point we are running into some overhead resistance, but the price action stays strong, so it really kind of keeps you on the sideline. If you are not in this move, then you just have to wait for the right opportunity, and if you are in this move, then you just continue riding that move until you see a bit of a reversal. So dollar again remains strong, and then here we are. Kiwi is just testing that support here, but the Aussie had a nice clear break of the support, but again finding some support here. So maybe this is where we are, where things look extended one way or the other, but we are also approaching some key support and resistance levels. Swiss franc continues to run higher above the 20, below the 50, so I don't want to get behind this trade here until it can really show me some sort of rollover yet. And Aussie, Euro, and the pound is kind of staying sideways as well. So again, we are determining where is the direction. The Canadian dollar is staying sideways as well. So there's a lot of currencies that I can say in the middle here. And the only one that are moving are the Aussie and Kiwi. But really the question is, they're hitting some key support and resistance areas. So at this point, they need to give me some confirmation that it wants to break lower. So I'm on the hold here. Again, at this point, if I'm looking for entering new positions, I will be a little bit more, give a little bit more time here, maybe a day or two, to see if it's going to bounce off over here or it's going to continue weakening. Now the dollar is again same thing. It's hitting getting to that key resistance level. So I want to see what happens then. So for long traders, you just want to wait for any reversal sign. I'm not seeing a reversal sign yet. But if you are on the sideline, wait for this levels to clear, because that's going to make it a whole lot easier. And here we are with the Japanese yen. It's kind of going sideways right now. So, but it still looks weak. But it's kind of sideways for now. So what currency pairs looks the best? Again, most of the currency pairs that I'm going to bring, they are also hitting the upper end of the range. The dollar CAD, 139 is the upper end of the range. Here we are with the dollar Swiss franc. I still like it, but again, I haven't gotten that breakout yet. What's the level I'm looking for a break is 91.50, and then use the 91 as a support, but not ready to pull the trigger yet. If I go into other currency pairs, again, I'm getting the very similar pattern. They look extended. I think any sort of a relief rally would be very beneficial. But right now, with the move from high to the lows, I think it's pretty extended move here. So use that, judgment here. Sometimes things are not as easy when things are very extended. So it's just the name of the game. Take a look at dollar yen here. After that beautiful breakout here from 152 is down at 154.72. So great for somebody who got that move. But if you are on the sideline, then is this the right time to enter? Possibly not. So really on the sideline here for potential moves here. Another one I'm really paying close attention to is the Aussie Kiwi for the CPI report tonight. Again, this is a trade where if the Kiwi strengthen and the Aussie stay weak, and I think look at the beautiful run that it had from March all the way till mid-April here. At this point, if this breaks below the support, which again coming around 108.74, this is the level I want to see for a break, and maybe look for 107.60 as a support. So there's a decent risk to reward on this trade. Again, that will be a news trade for the CPI tonight. But outside of that, keep an eye on the broad markets. Take a look at bond yields as well. So U.S. bond yields, you can see that they are staying strong. And if you just take a look at the price action, does it look like it wants to break lower or higher? Well, clearly it wants to go higher. And that's what's just going to keep the dollar on the upside as well. And that's exactly what we're seeing. So here, take a look at those two. And if you see a turn in one, probably, especially in the bond yields, that would again put a pressure on the equity markets. And then also put pressure on the dollar. Either way, again, this is the time to take a look at those correlations as they're playing out. So in conclusion, markets likely to remain weak. Again, we have been very strong market for the first quarter, and now things are looking a little bit weaker. But as far as the trade goes, strong dollar Swiss franc, neutral pound, euro pound and CAD, and on the weak side, Aussie, Kiwi, and yen. So that's really where we are at. And our job is just to trade the markets in front of us. If things are extended, then it's the best to wait and look for the next opportunity, which might be coming up in the next day or two. But till then, stay disciplined and happy trading. Cheers, everyone.